I want to congratulate our own Catherine Weisslogel for her recognition with American Banker's Top Women to Watch. When Catherine joined us 2 years ago, she said that she would transform our treasury and payment solutions area, and she's done just that. So Catherine, from the entire Synovus team, congratulations on this well-deserved recognition. You're a rock star.
Hi, this is Jennifer Streibel, the U.S. Chief Operating Officer for HSBC. Today, I'd like to recognize my colleagues, Diane Reyes, Kavita Matani, and Tara Latini, for being selected to the American Banker's Most Powerful Women in Banking and Women to Watch lists. These women set the standard for leadership, and I am so privileged to be able to work and learn from them each and every day. Each of you continue to inspire me and make me a better person, woman, and leader. I'd also like to congratulate all the other honorees at today's event.
Congratulations, Julie. We're so proud of you.
Congratulations, Jules. Very proud of you.
Felicidades, Julie, y buena suerte.
Congratulations.
Felicidades.
Congrats from Ready Cooperative Bank.
Good evening. My name is Glenn Jackson. I'm the Chief Diversity Officer at M&T. And tonight I'd like to take a moment to recognize Michelle Trolley for being named to American Banker's Most Powerful Women to Watch. Personally, I've had the honor of watching Michelle blaze a trail from tech transformation, helping to guide an organization through uncertain times towards the new normal, and always holding diversity, equity, and inclusion at the center of her work. On behalf of so many of us at M&T, I'd like to congratulate Michelle on her many well-deserved accomplishments, but mainly I'd like to thank you, Michelle, for being an example to each and every one of us every single day. Congratulations, Michelle.
I want to extend my congratulations to the TD Bank team, who claimed 3 honors this year, to our Most Powerful Women in Banking top team, our Women to Watch Malna Wilner, and Anita Adele for being recognized as a standout leader. These are just well-deserved honors. I'm proud to work with all of you and grateful to have you on the leadership team of TD. Let's have a great night tonight, and congratulations again.
I am honored to recognize Liz Wolverton, who's our Synovus Chief Strategy and Customer Experience Officer, for being recognized as American Banker's Women to Watch again this year. Liz is instrumental to so many things that we do here at the bank. And so I'll just say from all of us here at Synovus, congratulations, well deserved.
Hi, welcome everyone to this next session. We're going to be talking about something that's, I think, been on a lot of people's minds lately, and that is the future of digital assets and what that means for the financial industry. I'm here with 3 very powerful women in this industry. We have Christine Waldron, who is Chief Global Strategy Officer at US Bank. She's been doing some really interesting work to help the bank find its way in this newer area and to support a lot of its clients. And she's built some interesting partnerships, which she'll talk about. We're here with Yan Zhao, who's president of NYDIG. NYDIG is a New York company that is doing a lot of interesting work on supporting banks and other companies in their efforts to provide digital asset and cryptocurrency services to their customers. And we're going to hear about some of the partnerships that she's helped forge and some of what she sees ahead. And we have Yuelin Li, who is Vice President of Strategy at Onfido, a company that's done a lot of interesting work with digital identity. And she's going to share some of the work that she's been doing with cryptocurrency exchanges and firms. So thank you all for joining me today. Let's start with you, Christine. What are you seeing from clients? What are some of the things you're hearing from clients, and how has the bank been kind of rebuilding and re-gearing to support this newer type of demand?
Sure. Thanks so much, Penny. So we are certainly seeing heightened demand across the entire bank for services as it relates to digital assets, cryptocurrency and stablecoins being one of them, but digital assets more broadly. And so what we have seen is, particularly in the area that I'm in the wealth management and investment services space, a demand from not only our retail and wealth clients, but also demand from our institutional clients and our fund services clients in particular for custodial solutions for cryptocurrency that they may be holding within their portfolios. They're really looking for a robust solution, a safekeeping solution as part of the broader custodial offering that we have that covers all their other asset types, right? And so really that was where we as a bank decided to start, was in that custodial element of the safekeeping of those cryptocurrency assets for our institutional and our fund clients in particular. We've seen also a tremendous amount of demand for digital asset tokenization, and we're really starting to see that picking up momentum. It allows for fractionalization of fund shares, of other asset type shares. We're seeing great momentum there as well. And finally, we're seeing a real interest in how the blockchain itself will replace some of the core legacy heavy systems that have been around for many, many decades, right, in supporting our businesses. And how can this important new technology landscape allow for just a modernization of the technology platform?
Sure, thank you. And we want to go back to some of the things you guys are specifically doing over there, but let's check in with our other panelists. So Jan, can you tell us a little bit about NYDIG and some of the work you've been doing with US Bank and with several other banks?
Yeah, absolutely. Thank you so much for having me on the panel today. So NYDIG is a technology and financial services company focused on Bitcoin. And so since our inception in 2016, we've really focused on working with institutions like MassMutual, Morgan Stanley, US Bank, with Bitcoin products that meet their incredibly high diligence standards. And over the past year or so, really, we've also started enabling banks and fintechs through technology integrations to access our institutional grade platform so that they can make Bitcoin products and services available to their clients. Ultimately, I think our belief is that Bitcoin in particular can play such a profound role in economic empowerment and financial security. So that's why we really thought of our first few years as sort of helping to drive institutionalization of Bitcoin, and now in the future really focus on how to help drive democratization of Bitcoin so that anybody can access it in a really secure and easy fashion. And so the way we've worked with financial institutions generally, we've been just so thrilled and honored to have partnered with US Bank. We've been partners for a long time, but working closely with them as they thoughtfully really approach the space in terms of how do they serve their institutional clients by being custodians. And so we support US Bank as sub-custodians with our cold storage system and our execution capabilities and others. With some of the banks out there on their wealth side, JP Morgan, Morgan Stanley, others, we've provided them with funds so that they can offer Bitcoin funds and Bitcoin exposure to their wealth clients. But I think also a big part of what we're doing right now is partnering with technology companies in the banking channel like FIS, Fiserv, NCR, Q2, Alchemy, Allied, really to integrate Bitcoin product services into banking mobile apps so that any bank or credit union can offer their consumers the ability to buy, sell, hold Bitcoin, and in the future, potentially other products like turn your interest into Bitcoin, generate rewards with Bitcoin, et cetera. And all of this is driven by just a lot of demand from the users and from the financial institutions themselves. They're just seeing that this is sort of the future, and we are really delighted to partner with everyone to try to provide the infrastructure.
Sure, thank you. And Yuelin, can you tell us a little bit about Onfido and some of the work you've been doing in the cryptocurrency industry?
Sure. Thanks, Penny. So Onfido are an identity verification company. So what we do is anchor your real life identity with your digital identity. So in the cryptocurrency world, we work quite a lot with exchanges, wallets, fintechs who provide crypto services, as well as, depending on the flavor of the day, ICOs, NFT issuers, and so on. There are two sort of main use cases that people use identity verification for. The first one is regarding compliance, AML, and KYC. Identity is obviously quite an important part of that, because by anchoring a customer's real identity to their digital identity from the origination, when you create the account, you have a solid assurance of what their real identity is from the beginning. And that's always been the standard in the, I guess you can say, the traditional financial system. And it's what is also adopted by a lot of the players in the cryptocurrency world. The second one relates more to, again, something we see in other traditional finance, which is regarding authentication, account takeover, and security reasons. I think given the amount of assets that's now in cryptocurrency, you're seeing a lot of very similar and very smart attack vectors, such as the OTP hack, using phishing to get email addresses, being able to take over phone numbers, and like other behavioral and coercion-based things. And so I think it's incredibly important, actually. It's not just about origination, it's also about ongoing for consumers to be protected from these vast and growing amounts of cryptocurrency assets. So that's kind of the two parts where we play with cryptocurrency, where we don't offer cryptocurrency ourselves.
Right. Interesting. Well, it's certainly important and challenging. I mean, just to follow up on that, when you think of Bitcoin and most cryptocurrencies, the original intent was that they should be anonymous, and of course they are pseudonymous because you can track a wallet that's operating on a blockchain to the person who's to a bank account, or to the person behind that account. To what extent can you verify or can you be certain of the identity of somebody who is who's buying cryptocurrency?
Yeah, it's a good question, because I think the ethos at the beginning was definitely around anonymization. But as soon as you link up with the traditional financial system and you actually need to exchange and get real fiat currency to be able to purchase these assets that have a lot of value, then you are inevitably linked to the traditional financial system. And the way, I guess, our world runs is with linked to your real identity. And so almost all the players we deal with, I guess you can say, touch upon fiat in some way, which is why they are much more conscious about AML KYC. I think if you don't, then you don't necessarily need to at this moment. Of course, things are changing all the time in different places. So it's just, this is the tricky area, which is why I think with legislation and regulation and where the industry is going, is if you've got something of so much value, dealing with financial services sitting, or some of it sitting outside the traditional financial system, it's difficult to see how this could not come under scrutiny, given that's sort of the way our whole world is set up, especially regarding like counterterrorism financing and anti-money laundering.
Yeah, and there's certainly been a lot of talk in Washington, D.C. lately about how to regulate cryptocurrencies, stablecoins, et cetera. And we'll touch on that later. But let's go back to you, Christine, because you brought up some interesting things that you're doing at US Bank. And you mentioned, well, first of all, can you tell us a little bit about what you've been building with NYDIG and Securrency and any other partners that are big for you in this area?
Absolutely. So certainly our partnership with NYDIG is a very instrumental one. So we were seeing tremendous demand from our institutional and fund customers to be able to custody that cryptocurrency on their behalf. We worked quite closely with the regulators and all of our partners within the bank to really look at how we go about doing that. And I think a lot of banks are grappling with that as well. Do we stand up our own cold storage solution? Do we put that infrastructure in place? Or do we really look at partnering with some of these state chartered banks, adding them to our sub-custodial networks, right? Many of us have network providers that we use, particularly for instance, for foreign assets, right, outside the US. And so how did we bring that solution, right? Add this asset type into our custodial network, right? And that was really where we said, you know what, let's take a look at some of these providers and the solutions that they've put in place and the technology that they have and the investments that they've made, and add them, do our due diligence on them, do that oversight on them, and add them into our custodial network. And so NYDIG was the first partner. They've been a longstanding partner, and they went through that due diligence process with us and were with us step by step. And so they were the first ones to really be added to that sub-custodial network to be able to support Bitcoin, particularly in the custody of Bitcoin. And so our customers really have kind of a best of breed solution, leveraging all the infrastructure that the cryptocurrency custodians and exchanges have put in place, right? While still having, that national bank, that traditional financial bank institution to support them.
And do you think this is starting to change U.S. Bank as an institution? Or is this more like, how do you look at this? Is this something that you can, a sort of a line of business that you can partially outsource? Or is this really something that might become, another part of the bank itself, more of a crypto services provider?
Yeah, I mean, we have a lot of initiatives across this entire space. Right now, this is kind of how we're approaching it. This is how we see the market evolving, because we wanted to have a very quick time to market and be there as the regulatory environment evolved, right? We are a very large servicer of registered funds and providing custody services to those funds. And as a result, we felt very strongly we had to be in a position should regulations change and allow for the holding of cryptocurrencies within funds to be able to support those clients, right? And so we felt this was the best path forward. It allowed us to leverage the knowledge and the infrastructure and the capabilities that have had a lot of scale and time and proven capability put behind them. And we thought this was a really good place to start, right? Is it changing the bank? I would say yes, it did change the bank as we went through this process, right? The conversations that we had around AML and KYC and how you perform that, how you perform know your transaction, all of those elements, right, had to be revisited. Your core infrastructure had to be revisited. How are you going to account for something with 8 decimal places in your core custody system, right? All of these things had to be touched. And what we did was, instead of standing up a small digital asset team or cryptocurrency team, we said, no, we're going to bring all of our operational units along with us on this journey because there's benefit for this. This is a new asset class that's getting a lot of attention. It's here to stay. We should leverage the full strength of our organization and bring them along with us on this journey. And I think that was a real differentiator for us when we stood this offering up versus some of the others that have more finite, ring-fenced cryptocurrency or digital asset units.
Mm. So Yuelin, Christine mentioned, and you mentioned this too, I think, that KYC and AML are a little different when you're dealing with digital assets. Can you talk a little bit about what some of the differences are? And, there's still a perception, I think, that a lot of money laundering happens through cryptocurrency and other forms of digital assets. what do you think of that? And what should, if banks are thinking about getting into this, what should they be thinking about in terms of what kinds of KYC and AML and BSA and, OFAC checks they need to do to support digital asset services and customers?
Yeah, from actually the origination point of view, when you have a new customer, it is in some ways quite similar because you're still trying to work out the real identity of this customer. And depending on what they're trying to do, you're still doing very similar checks as you would if they were trying to open a bank account or get a loan of fiat currency as such. Since you need to, you will probably be using some form of database. You need to look them up the sanctions list. You might be taking a document or biometrics as well, or various forms that you can use later. So I actually think a lot of the beginnings are very similar. I think, as Christine mentioned, it sort of then depends on your infrastructure. So there's two big components. One is regarding your digital channels, because the vast majority, if not all of cryptocurrency world runs on digital channels. And so you don't really have the fallback of going into a branch or meeting in person. And so you need to have the infrastructure get set up and scale and so on. I think the second is also just where that has been appealing to is sort of digitally native people and consumers who have very high expectations of what they can or cannot do, how quickly they can do it. It's not the kind of people who would wait a long time to be able to open their account or to be able to see a transaction, to see their transactions go through. But at the same time, you've got this infrastructure already set up, which if that can deal with this, great, but it probably wasn't optimized for this from the beginning to the end. And so I think that's where banks probably need to make quite a bit of investment. And it's simple things as you're used to tracking, say, money moving on the SWIFT network or whatever network you're using. And actually now you need to different forms of transaction monitoring, whether you're doing that in-house or out and so on. I do think that I said two things. The third thing is, I think a lot of banks have already also set up quite good networks among themselves, especially regarding fraud detection. So I know quite a lot of these, some of them consortium based, some of them just actually a bit more informal than that, to trade, I guess, lifetime information about fraud rings or new things that come up. And that doesn't exist in the same way in the cryptocurrency world at this moment. I think since a lot of banks have been around for a long time and they know each other very well and they've worked very closely, we definitely, whether in the UK, the US, or other countries, you see these networks that already exist, which are very effective. And if they don't exist in the crypto world in the same way, as far as we're aware, that the exchanges aren't sharing this kind of information, then that could be a bit of a blind spot. It's one of the most requested things we get from our clients, because since we have so many who are more either digital asset based or fintech based, who aren't part of these networks that already exist, and who do still face the exact, as we said before, the same type of fraud attacks. And so setting, I think, that up or being able to be effective without that, if that's something that you're usually quite reliant on, I think that's also something that banks really have to think about.
So you're talking about swapping war stories of fraud attacks and that kind of thing?
Yeah, absolutely.
Kind of thing.
Yeah. A fraudster doesn't go and do this once, right? They go and try at lots of different places. And I think Christine is nodding, so on the right track there. Banks have spent years and years building up these information sharing networks of different sorts. And again, the regulators probably also have been working closely with them for years and years. And now you have this whole new industry with so much money and assets and so on. And that infrastructure is still very incomplete. But I'd love to hear Christine's view on this.
Yes, I completely agree with you. This is the component, right? This sharing of information, which if you think about it is very counterintuitive to how this technology is supposed to work, right? It's supposed to be very private. And but the sharing of information and that capability that we've long had inside financial institutions, right? We need to leverage that discipline in such a way where it still protects the privacy, but it allows for us to uncover that. And I think that the technology is certainly powerful enough to be able to enable that. But it still does require some maturing.
Interesting. How about you, Jan? Because your company works with a lot of banks. Yeah. Is this something that comes up a lot, that the concern about bad actors, fraudsters getting in and using services just because the bank just didn't realize that this person was some kind of drug dealer or con artist or what have you?
Sure. I think like one of the things that's I think people often don't realize or don't really think about is I think one of the points that Yuelin made earlier is, if you're interacting with the financial services, traditional financial services system, you are going to get AML KYC if you're in the US and all that. And so this is not anonymous. And in fact, in a lot of ways, Bitcoin or pretty much any digital asset, most digital assets are in a lot of ways easier to trace than cash, right? Like there is a blockchain, a history, it's fully public, you can trace it. There's a lot of work done by companies like Chainalysis and others to sort of look at bad actors and bad nodes on the system. So when we work with the banks and when we do integrations with banks, actually one of the first things that we focus on in the first integration that we do is actually what we call a walled garden or a closed system. So a client of a bank or credit union can buy Bitcoin using the funds that's already in their bank or credit union. And then they can sell the Bitcoin and the funds come back into that same account at that bank or credit union. And so what that does is, at least in this first implementation, really removes a lot of the risk of then people being able to deposit Bitcoin in or even potentially more concerning, moving Bitcoin out and transferring, and where does that go and who does that move to and what are the transaction monitoring systems there. So I think what we emphasize to banks is this walled garden approach is a great conservative approach to start with. In the future, maybe we can expand, but let's start here, right? Let's all get comfortable. Let's all understand the risks. Let's all get the reps in place. And then the other thing to understand is that once you have this walled garden approach, really there's nothing different, right? You're already doing all the KYC, AML, and transaction monitoring on your clients and on the funds in that account. The only place it's going is to buy Bitcoin and then coming right back. And we're doing all the Bitcoin monitoring on our side. So really, from a security perspective, like all the best practices still apply, but that should be no different than anything else you're doing. So I think we try to approach it from a, let's be cautious and conservative and let's step into it. And over time, as there's more systems and more information systems and more things like that, then we can start expanding functionality.
That makes sense. And while you're here, since I know NYDIG is very largely focused on Bitcoin in these relationships with banks, is because a lot of the bankers are focused on Bitcoin as well. Jamie Dimon recently said Bitcoin is worthless, like in his personal opinion. It has no value. There's nothing behind it. He, will support it because our customers are adults and they want it, so we'll give them what they want. But what would you say to that? Do you agree?
Look, everybody's entitled to their own opinion, and there's a lot of divergent opinions out there. How we think about it at NYDIG, at least talking to a lot of consumers and financial institutions, I think this is how we think about it. Like, I at least really look at it from a big picture, macro perspective. The world is only getting more digital, more networked, and I think in a lot of ways more decentralized. But like, if you look at mail going to email, physical stores going to e-commerce, villages and physical networks becoming like digital networks on Facebook or Instagram and others, I think it's hard to imagine the world becoming less digital. And to me, digital money, or we think Bitcoin is the best digital money, though maybe not the only, is really just a natural step in that. That doesn't mean there aren't hiccups in the evolution, and that doesn't mean there aren't skeptics. There were a lot of skeptics with e-commerce, and like I was a skeptic early, like, who wants to put their credit card on the internet? Easy. Little did I know that would be what I would do every single day. I remember in 2001, I think the price of Amazon stock went down to basically nothing. There was a cover of a magazine saying Amazon.bomb because it was going to go away and this isn't a thing. There are hiccups in the progress of technology, but I think to us, technology really only goes one way, and it's more digital, it is more networked. And to me, that points to Bitcoin.
That makes sense. So one thing I wanted to ask you guys is why, I shouldn't say guys, ladies, is why do you think that the industry is moving, the mainstream financial industry is moving relatively slowly, except for companies like US Bank and some of the banks you guys have mentioned? What are the things that hold people back? Christine, do you have any thoughts on that?
Sure, I do. I think a lack of understanding, really, of how secure the asset is, what the asset is, how does it work? I think there is a lot of knowledge sharing that still needs to occur, right? And there is a lot of skepticism, right, across the financial industry in regard to it, right? And it is coming from a little bit of a lack of knowledge in terms of just what and how it is, and what a cryptocurrency, what a digital asset means, right, and how that can evolve our industry. And so, certainly a lack of knowledge. I also think a lack of regulation, right? And so I think that by not having regulation, it has somewhat deterred its growth projections, right? I know this is kind of counterintuitive, but I do think it's at a life cycle stage where regulation will help it be accepted more as a norm. And I think that is a big important piece to this equation as well.
Sure. Yeah. What kinds of regulation would all of you like to see, or would make sense to help kind of give everybody some comfort, give banks some comfort level in proceeding with cryptocurrency services? Yuelin, do you have any thoughts on that?
I think actually UK is a really interesting example because you can use what we call like the Innovate Finance regulation that came around about 8 or 9 years ago, and that created the first wave. So it wasn't digital asset related, but it was still very digital product related, for people to be able to invest in real estate ISAs, the P2P networks and so on, all within the framework of legislation. And I know, maybe because I work in the industry, I was definitely reading the fine print and the fact that they were if you were invested in something like this, but in a lot of cases, they were actually, the assets were held at custodian banks and so on. And so you were like, oh, I'm not just giving my money to this random platform because actually the money is being held somewhere else and then it's been invested and so on. And having, I think, some form, at least thinking it was very much like overviewed by the FCA and or FSA at the time, and then also restrictions on what you can market, what information you need to give, etc. Like that actually made that industry take off much, much quicker. I completely agree with Christine on that because it felt much more mainstream, and you could also get this sort of information very easily. And by, especially if you had to become what we have this thing called ISAs, which is a tax efficient way of investing. Then to be able to get that, you have to go through a full application with the FCA. It didn't take forever, but it probably did take about a year. And so then once you're through that process, consumers know that you've been through that process and you've been tested. So I do think once then you're kind of part of the system. And so it's not that you need to be regulated like banks and have to have all of the same restrictions as banks, but I definitely agree that some level would really push mainstream adoption.
Okay, great. We have a question from the audience about, are there any studies about the numbers of consumers that participate in the cryptocurrency markets that show how prevalent this activity is? Jan, have you seen a study like that?
Yeah, so there are many market studies. We've done one internally at a high level. It really corresponds to a lot of the studies we've seen externally as well. So in the US, at least, approximately 20% of adults have some exposure to cryptocurrencies today. What we've asked them actually is, of the 20% of people who own cryptocurrencies, what percentage of them will actually prefer to own it with their bank or trusted financial institution rather than an exchange or other consumer app they have. And 80% would rather prefer to own it through their bank. And for most people, when we say that, it's a very high number, but it's also very intuitive, right? It's your trusted financial institution. You sort of want your financial assets there. The other thing that we found really interesting is, of the 80% of people or so who don't own any cryptocurrency today, more than 50% would be interested if they can get exposure through a product that their bank offered. And again, I think it goes back to something Christine said, like it's not just with people in the industry, but it's also with consumers. There is a knowledge hurdle, right? It's hot wallets, cold wallets, cold storage and Bitcoin and Dogecoin and Ethereum. Like, what are all these things? How do I think about it? Gosh, do I have to download a new app? Which app should I download? Do I really want to give them my PII? Do I really want to wait for 3 days for my money to go there? And then once I sell, do I really want to wait 7 days for my money to come back? It's just so much work. So that's why we're so excited about integrating with banks, frankly, and letting banks have this functionality. Is I think that actually most people who don't have access to Bitcoin would be interested if they could through their bank.
Sure. And I think I've seen studies that show about 13% of Americans have some kind of cryptocurrency investment, but I'm sure that's going up all the time. Another audience question is, does the FDIC cover cryptocurrencies? And Yuelin, can you answer that for us?
Yeah, so not at the moment. It's something that they are reviewing and they're preparing legislation on. And I do think some of the new stuff are out there as well, like given they're at zero, to go from zero to coverage. And I think that's why they're proposing all these intermediate steps.
And we have another audience question about, how does using an exchange like Coinbase differ from a bank with regard to cryptocurrencies? Well, I can tell you, you can't buy cryptocurrencies at too many banks today, but does anyone use Coinbase and want to describe? It's basically, you use the app and it's fairly simple to buy, but as far as I know, sorry, Christine.
Yeah, I do think that there's a difference between an institutional custody cold storage option, right? And the security that brings versus holding your crypto at an exchange, which is a very common retail consumer option for people, right? When you're holding millions and millions of Bitcoin, you want a different level of safety and security around your keys than perhaps you do as a retail investor would want. And you're going to be willing to pay for that additional security and safety when you're talking about that size asset. So think of it in two different buckets, right? Kind of one is designed for the retail community with the exchange and a lot what's going on with Coinbase. Heck, Robinhood announced in their account you can get a burger from Burger King and some crypto the other day. I mean, it's just, right? That's a whole different animal than I'm an institutional investor with, several millions of dollars allocated to cryptocurrency as part of a diversified strategy and the security you're looking for.
That's a good point. Yeah, sure. So Jan, I think we'll give you the last word. A lot of banks are sort of hesitating, watching what's happening, not necessarily jumping in. Is there a cost of doing nothing in this area?
I really do think so. One of the reasons why so many of our technology partners have been so eager to partner with us and do the work of integrating it, it's because they're hearing from a lot of the banks that really want to provide Bitcoin products and services. And the reason the banks want to is a lot of them actually it's really interesting. They did a data-driven analysis. So they looked at data, looked at how much money was leaving their bank to go to one of these consumer apps to do things that the bank can't offer. And when they looked at it, it was a lot of outflows. And for community banks, and really any bank who wants to retain their customers, wants to continue to be primary, and wants to hopefully grow the relationship, I think this is a really, really important part of the future.
Sure. And Christine, would you add anything to that? So we have a few more seconds.
Yes, I think it's absolutely critical banks be observing this trend and make sure that they're evolving to support their customers' needs.
All right. Great note to end on. I will thank you all very much for joining us. And to everyone in the audience, thank you for your time today. Hope you enjoyed it.
Thank you.